So we've got dollar yen in this long-term uptrend. So it's heading higher. However, drawing this with a broad brush, we've come out on the, so we've started creeping higher, we've shot higher, we've come back in. These lows didn't penetrate anything significant. The significant low would be over here somewhere. And we continued up. We continue moving up, and up. Now we've come down and we did take out this area of support, which now becomes resistance, thereabouts. And we've been creeping lower. We took out these lows, another area of significance. But only to come back up. So I'm just marking this as, this was red, so it's now support. So we broke down, but we found support again above these significant lows. And that bear trend there was broken. So now it becomes a bull counter trend line. So we've come back up into the shorts. This is a bullish trend. So moving in. So the bullish trend was broken, which became a bearish counter trend line. And now we have come down into that length. We've met support here. And now we're moving back up to test this old resistance, which is now acting as support. Because we've broken it, we've come back in, and it's reacted as support. Now, if we were to draw a trend line on this and a Fibonacci, there's our trend line. As you can see, we are still on the bullish side of the move. Now, this is a W formation, so you'd expect the price to come into these longs towards the neckline. So what I'm in anticipation of currently is a deeper retracement. Regardless of this support area, I would argue that we could be coming lower, but I'd only commit to such a move once it's been confirmed. And it's only going to be confirmed once this trend line here is broken with a close below it. So I'm looking for a daily close below the trend line currently. Now, if we were to move down to a 4-hour chart, we've got this W formation. So I'm looking for a move back in towards the neckline, so long as these highs hold. I'm bearish for the meanwhile, looking for, as I said, a break of the trend line. So you might argue, well, we've already had this break of trend line over here, but it hasn't had a daily close yet below it. So we're just seeing a move back up into the shorts, quite common. And then we're looking for the move lower. And when we get that, if we get that, that will be our daily close below the trend line. And then at that point, we can start looking back to the shorter term charts for our entry point to target into the Fibonacci scale, potentially all the way down to 61.8, that aligns pretty much with the neckline of the W formation. This W formation, the neckline in here somewhere. So moving across, it aligns roughly with the 61.8. So let's see how that pans out. On a continuation, however, so if we move out to a weekly chart, we can start to see where this market might be heading. So there's no reason, let's just clean it up all entirely. So this is the weekly chart. And we're bullish still, while on the front side of the trend, we've got resistance over here. We could be quite easily moving up into test the areas of potential resistance. So 140.80, 142.20s, and higher for the stop hunt above those highs, swing highs. So you've got that swing high there. That's not really a swing high, but it is the high of that opposing candle in that downtrend. So it's a significant high that was made as a swing high on a lower time frame, so it's still significant. And if we were to break 142.20s, then you're plain sailing all the way up into this area of potential resistance, touch above 145. Well, that's a long way off. So for the near term, we're bullish until, as I said, we get a break of trendline support on the daily chart. And we want to see a daily bearish close below the trend line. And we've got support at 137, 40, 50-ish, that sort of area for the time being.